Hello. Hello. Can anyone hear me? No, getting a. Can you put your headphones on and see if you can? Hi. We're still waiting for a couple of more people to show up. Should be able to start in a minute or two. All right. Here we are. Good afternoon, everyone. My name is Vijay Kalra, and I'll be doing this brief presentation on Introduction to SR&ED, SR&ED. I will take you through different slides sequentially, and during this time, please type all any questions that you might have, and at the right opportune moments, I will try to answer them during my presentation. So let's get right to it. A little bit of an introduction about our company, SR&ED Funding Consultants, Inc. We have been in business about 14 years and have a team, the consulting team, that has more than 50 years of combined experience. And we have, in the last 15 years, filed over 200 claims and got more than $20 million for our clients from the government. I am a CPA, chartered accountant, for about 25 years, and I found SR&ED to be one of the best career moves I made in terms of the kind of value we could add to our clients. And based on my knowledge of tax and the nature of this program, we were able to really create tax modalities for our technology-based clients, which really can become a part of their critical financial planning. And that's how I normally market this. We do have a full service firm. That means we also write technical reports as well as do the tax planning and the tax filing part of this program. What is SR&ED? SR&ED stands for Scientific Research and Experimental Development. The program is a Canadian federal tax incentive program that has been in existence since 1985. It encourages Canadian businesses of all sizes and in all sectors to conduct research and development in Canada that would lead to new, improved, or technological advanced products or processes. This is the premier program for this particular idea, that is scientific research and development. It's a firmly established federal program with no upper limit on the budget, unlike a lot of other programs where there is some money allocated in those programs annually, and as soon as the money runs out, they do not give out more money. In this particular program, all the companies that apply for it that are eligible to make this claim will get the funding out of it. Just a brief introduction as to history and the context. The federal government currently pays out between $4 and $5 billion to more than 25,000 Canadian companies. And in addition to SR&ED, which I stated earlier is a federal program, most of the provinces provide additional credits applicable to the same research and development on which the federal money is paid. And these provincial programs apply to R&D work that is happening in their respective provinces. So claimants can apply for SR&ED investment tax credit for expenditures such as wages, materials, overheads, and SR&ED subcontracts. And the way the program is structured, it favors small to medium-sized companies a lot more than it does to the large companies or publicly traded companies. The main difference between the small companies and the larger companies, and we are talking in context of what is called the CCPCs, the Canadian Controlled Private Corporations. The main difference and the main advantage they have over the others is that they can get a cash refund for this credit from the government, regardless of whether they owe any taxes or not, whether they have generated any revenue or not. They could be just in a completely build-up stage, burning money, and at the end of the year, if what they have spent on, if those activities are eligible under this program, then they will get a check from CRA after a claim is filed. So just recapping, who can claim SR&ED? Basically, any Canadian taxpayer can. Individuals, small companies, or the larger companies. The most money can be had as a CCPC, as a small company, although individuals can also claim it, but I recommend very much against it. And the non-CCPCs get lesser money, and they also don't get a cash refund. They only get a, not only the tax credit rate is lower, it's a non-refundable credit. And that means that they can only adjust SR&ED against the taxes payable on their income and other activities. Some things to remember, and at this stage, it's very important to understand that SR&ED, despite what it says, scientific research and experimental development, does not mean that it becomes restricted to a certain industry or industries, because when we talk about scientific research and experimental development, some pictures come to our mind. For example, information technology, IT is one, medical research is the other one. But really, the credit is not restricted to any industry. It is actually based upon the kind of activities that a business undertakes. So take, for example, information technology, which has now become a commodity pretty much in every industry. That a company that is otherwise conducting its main business, which is completely unrelated to any major science, and yet they might be using IT in a manner that they need to do, they need to develop some particular part of their ERP system or their product delivery system in some which way, shape, or form that addresses some particular technology. And during that, they might end up undertaking a project that would create some advancement in the technology. And that could easily be eligible for SR&ED. So again, SR&ED is not specific to a particular industry. It is activity specific. It is paid to a Canadian company for achieving technological advancement by creating new or improving existing materials, devices, products, and processes. The program applies to Canadian taxpayers, but includes foreign-owned companies duly set up in Canada for work done on Canadian soil. That's another important part to it. The work that gets paid for in this program is work that is performed on Canadian soil. That indirectly means that we are creating job and business opportunities in Canada. Some examples: IT and telecommunications, manufacturing and processing, software development and computer sciences, plastic molding and chemicals, oil and gas services and production, electronics, aerospace, and really, I can't put a comprehensive list here. It's just to give you an idea that a lot more is eligible under this than one might think. So we talked briefly about how the expression SR&ED is defined in the law. There are 4 types of research that this program recognizes: basic research, the work carried out to advance scientific knowledge. It is usually done in university or research institutes purely to gain scientific knowledge. In the private sector, companies are not undertaking any basic research because their research is generally related to some business or commercial goal, which is what triggers a whole set of objectives, which then lead to work that might be eligible, but that's not basic research. Applied research is the second category. It's also work carried out to advance scientific knowledge, but unlike basic research, it's done with a specific practical application in view. The areas where most of the money is paid out by the government are the next 2, which is experimental development. This work is carried out to achieve technological advancement for the purpose of creating new or improving existing materials, devices, products, or processes, including incremental improvements thereto. So you don't have to invent a wheel every time and think that that's how you can make this claim. All the incremental developments to the current technologies, which enhance the functionality of technology as it existed before this research was undertaken, might be eligible for this. This is the most common type of SR&ED work for which most of the money is paid. The last category, which is quite important, particularly for IT-related projects, is the technical support work. These activities are carried out by or on behalf of a taxpayer with respect to engineering, design, operations research, mathematical analysis, computer programming, data collection, testing, or psychological research, where the work is commensurate with the needs and directly in support of work described in the above 3 categories, and is undertaken in Canada or on behalf of the taxpayer. Now, technical support activities really by themselves are not eligible. They get hooked on to experimental development idea normally, and that's how they become eligible. For example, writing a software is actually a technical support service. Writing a software is normally a software is written in a standard programming language, could be anything, and that would be considered standard engineering, which is not SR&ED. But typically, writing the software is an afterthought. After once an idea is identified, some technological threshold is reached, and as we are looking for new technologies is why we would end up developing software, because it would be otherwise much cheaper to just go and buy something off the shelf and not spend all this money in developers and time and going through this expense. Why a certain change in technology was needed, why there was a technological challenge or a need, is why software was written later on, ultimately. And therefore, it is a technical support activity. But unless this activity was undertaken, the whole idea of experimental development would not be fulfilled. It becomes a part of the SR&ED expenditure pool. 3 cornerstones of SR&ED. So this is these things are very important to understand, because a clear understanding of these would be able to give you a fair bit of idea as to what part of the work that you might be looking at would be eligible under it. Technological uncertainty is the first one. Technological uncertainties are barriers at your existing level of technology and scientific knowledge that prevent you from achieving your goals. They may arise from shortcomings or limitations of the current state of technology that prevent a new or improved capability from being developed. Second one, systematic investigation or search by experimental analysis. The approach includes defining a problem. So based on the technical uncertainty, you define a constraint or a problem, then advancing a hypothesis towards resolving the problem, planning and testing the hypothesis through experimental analysis, developing logical conclusions based on those results. It means each approach you take to resolve your technological uncertainty should be a planned experiment based upon an idea or a concept. This is not trial and error method. This is more like looking at a certain technological problem and laying out different alternatives that might, one or more might work towards the solution. Then going through each one of those experiments and finding what works, what doesn't, what works better than the other, and therefore drawing conclusions and then creating further approach to really solving your technological changes, technological problems. Now, the difference between technological uncertainty and technical uncertainty is that technical problem or uncertainty may simply be that you're not using the right kind of machine or the right kind of equipment or the right skill level of the people who are working on it. That stuff does not qualify as SR&ED. If you can remove the technological problems you're having by having a faster internet connection or a smarter software engineer or buying a better computer system, those things are not advancements of technology. You're just enabling that technology by spending a little more money on it, and it's pretty much standard stuff. So therefore, it does not qualify. So the first cornerstone, as I said earlier, was technological uncertainty. Second was investigation and experimentation. Third one is technological advancement. By following a systematic approach into different alternatives and investigating and creating alternative solutions and conclusions, then we come to the third cornerstone of SR&ED, which is technological advancement. That there's a measurable result that would show, after all the experimentation, whether a viable solution is available, how much of our original technological objective it's going to achieve, or that a solution is not available. A measurable improvement or generation of new knowledge to advance your technology base before you undertook systematic investigation or search by experimental analysis. At the end of all this experimentation, the technical advancement may actually be that you come to a point where you conclude that an advancement of any other sort is not possible. The advancement that we sought out to achieve cannot be achieved. And that's an advancement of knowledge as well. That means that SR&ED is still eligible for your projects which ultimately did not succeed. The advancement you created in those failed projects was that there are certain things and there are certain projects, there are certain ideas for which the solution cannot be achieved at this point. So here are a few questions that would be symptom, that would be a sign of SR&ED eligibility, and these are more in simple language, so they're easy to imagine, and then from there you can start really thinking and creating, looking at the documentation and records to see if any of those things applies. Here are the 4 questions. If your company has been facing significant technological difficulties or challenges, or involved with the development of a new product or process, or involved with the improvement of an existing product and process. So new product as well as improvement over existing technologies. And then the 4th one is if your company is investing or plans to invest in near future a significant amount of money in technology, there is a good chance that there might be some shred in it. So any of these questions, as have been laid out on this slide, if the answer to any of those questions is yes, consult someone who may know the subject better and will help you through the process to identify which streams, which particular expenses could be eligible. Few general examples. After those 4 questions, these are a few more examples. Again, no comprehensive list can be made on these. We just took a few ideas and put them on the slide, so they would be sort of easier to identify. So the first one, designed, developed, or attempted to develop new software, systems, tools, product, processes. Have you created prototypes of new products or devices? Have you modified any existing technologies for it to become more functional, better, faster, more efficient? Have you registered any patents or trademarks? Those are indicative of something new that might have been done in design or fabrication of a certain product or process. Have you integrated various databases or applications that don't normally communicate with each other? Integrating different technologies, that is. Have you added new features, modified or improved an existing product? Have you improved response time of your software applications by writing a patch, by writing an additional piece of software to back onto the first one and basically make it work better and do things that it wasn't doing earlier? Have you been making changes in your processes to reduce your costs or improve manufacturing and other capabilities? Have you created a new product, made improvements, or added new features to an existing product? Have you incurred costs related to a process, project, or prototype that is incomplete because of unresolved technical problems? Have you done any significant modifications to your product formulation? Are you creating automation in your production processes? Have you modified existing products or machines to new applications? So it'll involve tooling and creating new tooling and dies and stuff like that. Have you machined or fabricated parts or dies using new materials to meet higher tolerances? Like I said earlier, these are some examples which will ultimately lead you to ideas, and some of those ideas will be shred eligible. And the next question is, okay, during this process, what all can you claim? And here are the 4 big categories which cover a lot of expenses that would be incurred during the development processes. Salary or wages for employees who are directly engaged in SR&ED processes. The second category is materials. Materials consumed or transformed in the process of SR&ED eligible expenditures. So this is materials consumed or wasted during the R&D processes, not commercial productions. Before commercial production starts, before a prototype is quality tested and released for production, all the expenditure on materials that might be consumed during the process, they would be eligible. SR&ED subcontracts. Your company may be hiring other companies or individuals on a independent subcontract basis who are performing certain parts of the SR&ED project that your company has undertaken. So there may be a combination of employees from the company and then some work subbed out, and the monies paid to subcontracts are also eligible. And the fourth category is overheads, and overheads related to the SR&ED processes are also eligible, although we'll go into a little more detail in the next few slides as to how this is best done. I just want to make a brief point that this presentation is more geared towards small to medium-sized companies. It is more friendly towards the CCPCs than others. This slide is a little more technical than was needed at this point, but I spoke briefly about overheads in the previous slide. And overheads that are related to SR&ED processes can be claimed in two different methods: traditional method and the proxy method. At this point, I would let you guys just go through the slide, but what I really want to say is that in most of the, in my experience, and most of the work I've done, we end up following the second of the two methods, proxy method, because it provides a very healthy and easy way of claiming overheads on SR&ED by claiming an extra percentage on the salary expenses, the salaries and wages that are paid, not on materials and subcontracts, but on salary expenses. And instead of having to record individual overheads on every R&D project at every stage, proxy method provides that simplified solution that CRA provided in order for these companies to make a claim based on the amount of salaries they had paid for SR&ED. The current rate of this overhead allowance on salaries is 55%. That means that for every $100,000 of eligible SR&ED salaries, $55,000 of overhead claim is available and can be claimed. A brief list of what you can't claim. There are certain expenses, mostly general and admin, and these can't be claimed because they don't directly affect or further the R&D processes that are eligible under this. So take, for example, admin salaries, patents and trademark acquisitions. Now, patent and trademark acquisitions or filing fee, these don't enhance research and development. They just protect your rights. So therefore, they are not SR&ED expenses. They might sound like it, but they're not. Legal accounting expenses, including any annual fee, any non-SR&ED consulting fee, none of that stuff. Interest and finance charges, entertainment or convention expenses, advertising or selling. And there's just a brief remark in that line. It says, ask us about OID MTC. That stands for Ontario Interactive Digital Media Credit, which is another consulting area that we undertake. And that's a matter to be discussed at another time in another webinar, maybe. That's another credit that's in addition to SR&ED and can be claimed for the same projects, but at different stages of development of the technology. So next item, membership dues or fees, fines or penalties, equipment. That's something of a recent change in SR&ED law. It came into effect in 2012. Before the change, companies could buy equipment and claim SR&ED SR&ED on that as well, but that cannot be done anymore. So any money that is spent now for buying or leasing equipment is not eligible for SR&ED deductions, SR&ED applications. Another item that I believe is sort of unfair to not include in this pool is rent and leasehold improvements of a facility where you might be undertaking R&D activities, but specifically it is pointed out in the law that these expenses are not claimable, and therefore they're not. So acquisition of a building, renting a place of for R&D, leasehold improvements, they are not eligible. Now, how much can you claim if you were an Ontario small company? So two sides of this table are CCPCs on the left and non-CCPCs on the right. CCPCs on the left show for salaries 68%, for subcontracts 35%, for materials 44%. Now, the thing to note here is that I'm not showing any overheads here, because overheads have been included here in the salaries, which have resulted in higher percentage. So when we take these three categories, salaries, subcontracts, and materials, the allowance on salaries can be much higher just by claiming the method that I earlier discussed, which was proxy method, which is what we normally do. So this will give you an idea that it's much beneficial to hire employees. Employees could be full-time or part-time, but to hire employees and pay them with proper tax deduction and issue them a T4 slip than using subcontractors. Materials are another game. Materials are exactly what they are, but labor is either salaries or subcontracts, and it's very highly recommended that you do your R&D with the help of employees and not subcontractors. 68% that is showing on salaries includes the federal claim, the proxy overheads, and the provincial Ontario claim as well. So this is just to give you an overall scope of how much money you can save by making this claim. 68% really means that of the salary pool, which is eligible for SR&ED, that means the wages paid to all workers who were involved directly in SR&ED activities, then for every $100 that was paid to these employees, $68 will come back to you in cash. So this is not just any small credit that you can sort of believe that it's okay to claim or not to claim this year or a year or two. This actually can make a very major difference on your R&D budget and your overall financial plan. On the right side of the screen is non-CCPCs, where the percentages are low, much lower than CCPCs. So on salaries, you have 42, subcontracts 22, materials 27. That is because the rate of the credit allowed to larger companies, the non-CCPCs, is lower. Whereas federal rate of credit on CCPCs is 35%. On the non-CCPCs, it's actually 15%. And still, when you add proxy and the provincial benefits to it, even the large company can end up getting 42% on salaries, 22% on subcontracts, and 27% on materials. Just a comparative table for your consumption. Different provinces have additional programs that I mentioned earlier that are tagged on top of the federal program. And Ontario has two programs that work together along with the federal program. One of the programs called the ORDDC, which is Ontario Research and Development Tax Credit, which is 4.5% of the expenditures. And then there's another Ontario Innovation Tax Credit, which is 10%. So it adds up to a little less than 14.5%, because you take the expenditure base, then take out 4.5%, then whatever is left, you take 10% on that. So the calculation works cumulatively. Other provinces, British Columbia, Alberta, Saskatchewan, Manitoba, and these three provinces have a lesser provincial rate. Manitoba has a 20% rate, which is the highest. Quebec is also, in fact, Quebec was the most generous until a few months ago, and then there's been a recent change, and they have also cut down their credit on actually very small claims. A significant part of that claim has gone down. New Brunswick, Nova Scotia, Newfoundland, Yukon, 15% across, and these are the things to remember. Most of the participants that I see are in Ontario, so Ontario is pretty close to, in fact, a little bit higher than the national average, and it works pretty well. And let's talk a little bit about supporting documents. When a claim is made to the CRA, the claim is actually two parts. One is the technical summaries about the projects that we are claiming, and technical summaries basically lay down for CRA a short, very short summary in so many words as to what kind of work was done during the tax year for which we are making a claim. Excuse me. So the technical summaries include the technologies that were developed. Now, we don't write in those technology summaries. We don't really give out any proprietary secrets or formulas, but it lays out in scientific terms, though, what kind of work was done. Second part of the documentation is making spreadsheets and list summaries of all the expenses that were incurred while doing the technology work. And CRA has prescribed the kind of documentation that these claimants, these companies need to create and maintain in order to make these claims and to be able to support their claim in case CRA decides to review their claims, which happens, I would say about 40% of the claims are reviewed. Some of them are reviewed just for financials, and a lot more times when a claim is reviewed, they'll review both your technology as well as the financial records. So let's just go through supporting documentation, a basic rundown on this. Yeah, your documentation should help you answer the following questions. Based upon a hypothesis developed, what were the technological challenges and what work was performed to overcome those challenges? That's the basic idea that your documentation should be able to demonstrate. For verification purposes, you must keep dated documentation and evidence of original technological goals, work carried out and progress made, and conclusions reached. So all through the process of R&D, whatever stages the process went through, whatever technological challenges were experienced, whatever hypotheses were developed, and however those hypotheses were worked on, and whatever conclusions we drew, we have to be able to demonstrate supporting documentation to prove that. And now, most of this documentation, in my opinion, actually is done by every company in some way, shape, or form. The idea is to formalize it a little bit more so that it complies with the CRA requirements as well. Just by making minor modifications in the way people work, in the way the projects are managed, we can easily overcome this requirement. But it has to be done in a conscious manner so that after a year or two, if your project is being reviewed by the government, we should be able to come up with simple stuff that we generate during the course of our operations for R&D. Some examples of technical documentation: a project plan and design documents, which are, again, are done by every company. When a major project is undertaken, there would be some planning. There would be some project plan and design work done. Document it, keep it, save it for somewhere down the road when someone is asking those questions. Dated reports, developer notebooks, lab books, drawings or charts. there are many ways to document this kind of stuff by making sure that dedicated email accounts are created, by taking pictures of every whiteboard design or drawing that has been discussed, by taking minutes of the meetings of the technical team, by making sure that any problems, any constraints, and any happenings during the project development are notified to each other through emails instead of just having a conversation about it. So creating a more formal system would leave a very healthy trail over a period of time to be able to prove the R&D processes. Creating a prototype is another example of, it's a technical document, but a technical piece. Another thing that applies particularly to the IT industry is software versions. As R&D is going on, as the product starts taking shape and developing its nuances, there would be various releases, various versions of this stuff, and every version should be saved through version control software that are available out there or any other means available to the company. But every one of those should be saved. It's dated. It's very easy to show to the CRA and be able to demonstrate how much time it took, how many iterations it took to get to a certain stage. So records showing what was done by different personnel that has been claimed through SR&ED process. Records could be technical summaries that people created, minutes of the meetings, as I stated earlier. Could be photographs, videos, and emails as well. Let's go to the next slide on this. Now, a few examples of financial documentation. The basic record in financial documentation would be a financial statement, would be payroll summaries for employees that have been paid to do SR&ED work. There would be payroll registers records, which your accountants normally do. If it was a material you're claiming, then invoice of materials purchased and proof of payment on those invoices. There could be contracts with the subcontractors or employees, any sort of lease agreements to prove when things were done at the location they were done, so on and so forth. Again, accounting records and financial statements. Yes, CRA has a right, and they exercise it very judiciously to be able to look into your financial records for SR&ED claim in order to see whether the expenditures that you are claiming in your SR&ED claim are properly recorded and claimed in that sense. Care should be taken, and it's important to understand that CRA, if they come to you to look at your claim for SR&ED, they are not trying to look your overall financial records. They are just interested in your SR&ED claim and how properly you have recorded your expenses and reported and claimed. They are just looking at that part of your financial statements, which pertains to SR&ED claim, and does not ever trigger a general audit. So there's nothing to be apprehensive about. They come and review these projects. They don't even like to call these audits, because audits sort of sound a little more scary than what they actually are doing, which is making sure that that law is followed in making this claim. Look at it this way: at the end of this exercise, they're going to cut you a check for a lot of money, and it's only reasonable that they have a right to look at some of this stuff and be able to judge for themselves that the claim is made in a reasonably correct manner. So what is the process? I'll just go through this chart quickly to show you. After a claim is prepared by the client with the help of a consultant like our own company or independently, however they do it, The complete claim is filed with CRA. When the claim is received by the taxation center, they do a completeness check over the next few weeks. And if the claim does not fulfill all the criteria of completeness, that any significant information is missing, or it is incomplete otherwise, any of the critical information that's needed to file a tax return. Now, mind you, this whole thing is working through your corporation tax return. So if anything significant, any significant information is missing, then they would send back the application. And if you're still within the stipulated timeline, you can review and complete that information, submit it right back, you're still okay. But 18 months after the end of the year, no other information can be really submitted, and then the claim might just lapse and be disallowed and can never be reactivated again. So completion check, if they find information to be complete substantially, then it goes through their risk management process, and they see if they do a check on whether they want to review this claim or not. If they decide not to review the claim, then the process is very simple. They issue you a letter saying your claim has been accepted as filed. And if I had to show you a sample of that letter, the way they send it pretty much says, we didn't check your technology, we didn't verify your expenditures, but based on your claim and based on the fact that we have decided not to review your claim this year, means we are accepting your claim as filed, we'll issue you a check, and we will not ask you for this information, for the information about this claim again. So it's done in the sense that they send this letter, they issue you a check, case closed. But that does not mean that a claim that has been accepted as filed this year would lead you to another claim like that next year. Every year's claim is independently looked at. So the fact that a claim has been accepted as filed in 1 year does not automatically guarantee a claim in the next year. There's no such thing. Every year's claim would be looked at independently. Chances are, if you get 2 claims accepted without any review, the third one would be reviewed. Typically, that's how it happens, and that's because they are not auditing 100% of the claims that are filed. Typically, it is about a third to 40% of the claims that go through a review process. On the left side of the screen is if they decide that they need to review your claim. In my experience, a review normally is for both technology and for the expense summary of it. But I've gone through several claims where one of the two sides, either technology or the expenditure review, was more prominent than the other. Typically, if they are just doing your financial review, they would not ask you any questions about technology. But if they are doing your technology review, they would ask you a great deal about technology and very little about expenditures and finances, just to make sure that they've been filed somewhat reasonably and they'll leave you alone. So this process is not very cumbersome. Typically, it is a fairly painless process, particularly if the client and the consultant are sort of well informed about the process and prepared for it. If your claim goes through a science review and they decide that your scientific activities do not meet the criteria of SR&ED, they would disapprove the claim. It is done in some cases. We've had a pretty good track record with it, but a lot of small claims are rejected by government when they're not properly prepared, or technology is not properly explained, or the management doesn't find time to really take them through the process of making them understand what was really done in the technological advancement that is different, that can be actually considered a tangible advancement. But typically this process is, once it's understood, it becomes fairly routine, not very difficult to go through. A little bit about how our claim process works. Typically starts with a discussion with the technology heads or project managers who are managing the projects. And during these meetings, we just basically scope out the projects and see what kind of projects can be and are going to be claimed, and just go through broad categories of expenditures that relate to each one of those projects, and get an idea on that. Then tax professionals and technology professionals go to work. We work with the accountant of the client and the technology heads and prepare technical summaries over a period of time, and basically relate the two. The expenditure has to be related to the technology that we are talking about. Do those prepare the claim forms, and then discuss with the clients as to what approach we have taken, what projects we believe can be claimed based on the information they have provided. Those summaries are discussed with the client, and then those summaries are then fed into the particular schedules of the tax return. And this tax return is then, this tax return is then filed. The additional things we do during this process are that we go through the entire tax structure of the company, as well as the owners, the directors of the company, to see how this whole structure can be optimized. In my experience, SR&ED has turned out not only to be a great program for making claims on research and development, it actually has turned out to be one of the centerpieces for technology-heavy companies in the small business world, where SR&ED can actually serve as the centerpiece for an entire tax plan and a strategy to generate funds year after year through this program for companies that are heavily into R&D space. I believe that these companies should be looking at SR&ED not just as an abatement of their SR&ED expenses, but more as something of a basic financing activity for their not just R&D, but how it basically as it affects their entire business during the incubation stage. So the 8th point, it says, is then we are filing a claim with CRA, which is done during the prescribed deadlines. The time period for filing that a company gets to make an application for SR&ED is 18 months after the year-end date. For example, if your company is on a fiscal year that ends on December 31st, then the filing date for SR&ED activities for the year ended December 31st, 2015 would be December 31st, 2015 plus 18 months, which is June 30th of year 2017. So 18 months after the year end, you have to file this claim. Now, important to remember that in 2017, let's say in the month of May, when this claim might be prepared, you're going back to your expenditures starting from 1st of January 2015. So the entire the expenditures incurred during the entire year of 2015, you can claim by June 30th of 2017. So there's, at any given time, if a company has not ever claimed SR&ED and is eligible, then we can make claims up to 2 years, current year and 1 year behind. But that's the maximum. After 18 months, this claim completely lapses, and it cannot ever be done again. That's basically the long and short of it. We're done with the presentation. I would take any questions if there are. I'm just trying to enable the chat on this. Just 1 second. I have a request from one of the attendees that they want to receive a soft copy of this presentation. Julian, yes, we'll be able to provide you with that. And just give us a day or two. If anyone has any other questions, please type it in. We'll reply. Otherwise, if anyone wants a copy of this presentation, will be sent to you later on. Thank you very much. One of the questions that has been asked is how long does it take for us to move a company through the SR&ED process? And it typically takes more time to file and get the money for the first time. In the later claims, it becomes easier and faster. But first time around, really all bets are off. We would try to get things done as fast as we can, but typically 6 months is not an exaggeration. It could even take longer sometimes. But in year 3 or 4, after making a couple of successful claims, the claims could happen. You know, after making a claim, it could be as fast as 4 weeks that we can get the money. Online? Yeah, Sherry asked a question as to what kind of fee do we charge? And now I'm a certified public accountant, and although the industry works strictly on, most of the industry works on contingency basis, that they take a percentage of what is received from CRA. We offer all 3 different models, which is a fixed fee, per diem fee, and also a percentage of the claim. I cannot give out a percentage here because really the percentage depends on the complexity and the size of claim. But just as a general rule, the larger the claim, the smaller the percentage gets. The industry works pretty much on the median is somewhere between 20 and 25%. But on claims larger than $250,000, the percentage would be lower than this. Another question that has been asked, and that's a very good question. I stated that clients whose claims are rejected, sometimes it's because they are not properly prepared. And the question is, do we help our new claimants to ensure their claims are successfully prepared, and do we defend them? Of course, we work through the whole process. For the new clients, we provide information, and we sit down, have meetings with their teams to educate them in the documentation and SR&ED process, we also are able to provide templates and be able to coach the staff of our clients to prepare the kind of documentation that is compliant with SR&ED. Seems like that's it, and we have been able to finish well in time. Thank you all, and I look forward to your feedback. Have a very nice day. Bye-bye.